Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I have two paper money trades for you today on one name coming out with earnings and one name in the news and on the move. And that first one is Google Alphabet. Remember, they had a investor meeting today, an analyst meeting this week where they announced a bunch of products and advancements and enhancements to their AI platform, and the stock has been rallying ever since. So what we're going to do is going to look at a call diagonal in Google Alphabet leaning to the upside. Now, the good news is that this call diagonal is a bullish play and Google Alphabet is going up. It has gone up already since we put this on, so we may have to adjust some strikes or the general thinking about this trade. So in terms of Google Alphabet, we looked at the June 13th, buying the 175 call, and then, buying the 170 call, and then selling the May 30th 177.5 call. So there's, you see the strikes. We're already moving the strikes. When you look at the 170 call and selling the 177.5 call, we put that in originally at $5. It's now trading $6.40. So these, you can see how these diagonals move if directionally you are correct. Now, it's a bullish posture in this trade. So that, with a 25, almost 26 delta, this is a trade that does well on the upside. It would do equally as poor on the downside. So make sure we understand that you could do a put diagonal in a bullish scenario. Or a bearish scenario. This is a bullish scenario. This is a call diagonal. So buying the 170, selling the 177.5 in the May 30 call, buying the June 13th. Now, can you adjust those? Of course you can. You can move those strikes higher as the stock rallies. But for this example, buying the 170, selling the 177.5, like I said, we put it in $5, trading about $6.40. The goal is a move towards the 177.5 strike. It's only $2 away from that now as the stock has moved up. And the risk on the trade is whatever debit paid. If you were to adjust, let's just do it on the fly. If you were to adjust to the 175, 182 spread, you could actually do that for about $4.76. So you can see where we originally looked at the first one is you could almost do the adjusted strikes for that price, $5 difference. So you can see how using the risk profile, changing the strikes, adjusting, that's the way you look at trades like this. But the risk on the trade on a diagonal is always the debit paid, and the target is the short strike on this name. So there's the way you look at the call diagonal. All right, let's do our second trade of the day, and that is one with earnings coming up after the bell today, and that is Workday. Now, like I said, they have earnings coming out after the bell. This stock has made pretty substantial recovery in the last couple of weeks. So what we looked at there in terms of an earnings look, because the front month expiration is a 70.5 implied vol, and the second expiration is a 54 implied vol. So what we looked at there is a put calendar spread, so a bearish lean on the Workday spread, buying the May 30th, selling the May 23rd. The difference between the diagonal and the calendar spread, same strike. In this case, we're looking at the expected move of about $20. Stock's trading about $270. We're going to the $250 strike. So the May 30th, May 23rd, $250 put calendar. We have that trading, we put that in about $1. It's trading right at around $1 right now. So this spread targets that $2.50 strike, right in line with the one standard deviation move. The risk on this trade, the debit paid. All it can do is go to zero. If it goes towards that strike, you have a chance for a pretty nice expiration, and you've got a fair amount of theta as tomorrow's, the May 23rd expires tomorrow. So really a one-day trade in Workday, looking for a downside move on a stock that has rallied. You could also do $20 high. You could do the 290 call calendar as well. But this one, we have a bullish posture in Google Alphabet, a bearish posture in Workday. Looking forward to their earnings after the bell today. That's our show for today. We'll see you tomorrow with another edition of The Daily Trader. I'm Kevin Hincks.